Once you overcome this mistake 90% of traders make, you will finally become profitable. On my 5-year journey as a trader, I failed for years. I blew up multiple trading accounts. I kept breaking my rules, and I felt every trading strategy I tried didn't work. That wasn't until a secret trading strategy I created after thousands of hours staring at trading charts that helps me know where the NASDAQ and S&P 500 are going without even looking at them. A secret hedge funds have kept hidden for so long to gatekeep a strategy that gives them an edge over retail traders is that Nvidia moves first before the NASDAQ and S&P 500. And if you can understand where Nvidia is going, you can know where NASDAQ and S&P are going before anyone else.
In this video, I'm going to teach you how hedge funds trade
futures and CFD market to make billions of dollars of profit by using Nvidia as a driver on where they're going to send price. So if you trade NAS 100 or NQ, SPX or ES, this video is for you, and by the end of it you'll understand how Nvidia moves the two biggest indexes that control over trillions of dollars worth of capital and be able to go out and take profitable trade setups based on what's happening on Nvidia's price action.
So how do we catch these trades? With Nvidia being such a powerhouse, when Nvidia has a support or resistance zone or an area we've seen a lot of rejection from, it will go out and react heavily and heavily influence what the NASDAQ does. So this zone that I drew out, if we go out to the 1 hour time frame, this was an area where Nvidia was rejecting very heavily along right here. But if you see where it is because of this time frame, and we look a little bit further to the left, this was an area as well on NQ where we were seeing a lot of rejection around this area when we had the big drop off. So you start to see how they start to work together. But here on Nvidia on the 1 hour, this really was a wicky area. They did not want price to break above here, and this is where the sellers were stepping in and going out and really pushing down price. So when we go down to the lower time frame over on the 5 minute, we can see during Nvidia's pre-market, we did not break this. We kept rejecting this 1 hour area where we're having sellers really step in. So then when we come over here to see what was NQ doing, you can see all throughout the day, right through, like, even if you were trading like pre-New York, trading during London, this was an area where you could just have taken shorts, reject, buyers try and buy it back up again. And then here is where you can go out and then start to take these really good trades. So you could take it either here. So once we enter the zone and we start to see the rejection, you take it on the wick rejection spike up right here. Stop loss above the zone because it's safe, targeting a 1 to 2, and then you could just get out right here at 1 to 3. And then even over here, so obviously you would adjust your stop, but when we get this pullback right here in later in New York, stop just right here at this high, and then target, you get here to just almost a 1 to 2, but you could put it like right here. So when you use these levels, you can start to see how important it is when we go out and get into these zones. So even when we go back throughout the day over here on Nvidia, so see how this area right here, like you look like you're just buying in the middle of nowhere, or you're also, this is also an inverse value, but here we really are buying on that same place where this was our bounce spot. We come back here, we reject, and then we just bounce so well right after, causing a huge upswing. And then we just get the pullback right here, where in NQ you may think like, oh, there's nothing really here, whereas when you're on Nvidia, you can see this is the area they're supporting, and then it keeps going back up to go out and take it perfectly here. Usually a lot of times Nvidia, once it sweeps, so we had this huge big gap here in pre-market. Once it sweeps the gap, this is usually your sign as well, like, okay, it swept the gap, went out to get all this liquidity, it's probably going to go out in reverse. And you can see that in multiple days where it'll go out and usually dig back into whatever pre-market previously did and then go out and reject and do its thing. And then sometimes you can get a gap fill after we fill the gap. So after we fill the gap, they already did its part, and now it's just going to go out and go in the opposite direction the rest of the day. And it usually can go out a lot of times inverse pre-market to go out and get the people who are swing trading. and really make some great moves. So that's going to wrap it up for today's video. I really hope all of you all enjoyed, and see you in the next one.